Still on this ring market, I had to do another explicit video. I know we're considering AEDJPY during the course of the week. We saw how the market closed. So one thing first, anytime you open your chart, the first thing you're looking for is this market moving up, moving down, or is it moving sideways? Now, if it's moving up, you're most likely looking at a trending market, either uptrend or downtrend. But if it's moving sideways, it means you're looking at a ranging market. And from the previous videos I told you, there are three ways to trade a ranging market, right? You either buy the support of the range or sell from the resistance of the range. You keep doing that, and you make a lot of money from that. So, but the problem or the challenge with this method is because you don't know when the range is going to break out. So let's say you were buying at the support of the range, and then the market decides to break to the downside, break the support, as in this case, if you were buying, definitely the market would have hit your stop loss and you'll be in the loss, right? So that's the only challenge. And the major challenge is sometimes you don't know the boundary, what you set as that boundary of your ranging market. The market can still go a little bit above it and still continue. What do I mean? Look at this example. We're buying the support. Remember, a support zone is where buy moves start from. So like in this case, a buy move start from here. Although some people are going to tell me, oh, but this is a sell candle. Yes, it's a sell candle. But if you notice, the way this sell candle is different from this. There is a long wick. This tiny line is called a wick or rejection. What this means is, although sellers push the market down, but buyers pushed it up. So the buyer's rejection is what this wick represents. Meaning, during the life of this candle, it came this low, but it got pushed back. Who are the ones who will push the sellers back? Because we only have buyers and sellers in the market. Definitely, it means it's the buyers that pushed it back. So that's a rejection, meaning that's a buy move. That's why you have this wick below the sell candle. So a buy move started from here, went up and came down. Another buy move, right, went up again, got here. Sellers pushed it down. Now, how do you know your support zones? Like I said, where your buy moves start from, meaning, and our buy moves are represented by our buy candles. In this case, my own buy candle is a blue color, my sell candles is a red. So my resistance of the range, these are the ones I marked with these two lines. So it's simple. It's as saying anytime market got between our 101.636 area to 101.265, anytime market comes anywhere within that zone, you are good to sell. If you got within your 99.16 to 99.595 area, was a good selling zone. If you were trading, simply buying the support and resistance of the range. Now, the second way of trading it is what I call the breakout. Meaning, after the buyers and sellers have been moving the prices up and down within the range, eventually one of them will need to break. Either you're breaking to the upside or you're breaking to the downside. Now consider trading as like a football game within two opponents. Everybody's trying to score in the house of the other party. So this is like saying buyers are trying to score in the home of sellers, which is the resistance zone. The sellers are also trying to score in the home of the buyers, which is a support zone, right? Now, the second way of trading it, I said, is what we call the breakout. Now, look at, eventually, first, there was a point here. Can you see there was a point where buyers broke above the resistance zone? How do I know? This buy candle closed above the range we marked. So if anybody was trading breakout without a retest, if they had jumped in the buy, they would have been buying. But see the problem with trading breakouts without proper retest. Whenever you trade the market, trade breakouts without retest, that retest is like a reconfirmation of that zone. It's like saying, okay, buyers are broke above now. We want to be sure buyers are still strong. It's like in the football team, somebody scores 1-0 first. Remember, you scoring 1 does not guarantee that you win your opponent. Haven't you been in a football match where somebody scores first, and while they are still celebrating, the opponents pick the ball, go straight for their goalpost, and they score back, and then the whole game changes. Now, the same thing in a breakout. Now, look at this particular example. Even though the buyers broke out, the sellers were also trying to defend their what I call their goalpost, which is their resistance zone. They pushed the price back down. So if you had jumped on this buy immediately, what would have happened? The market would have definitely hit your stop loss, because remember, anytime you buy, you want the prices to keep pushing up for you to make profit. So this is an example of what I called a fake out. Why? Because the market gave you a false alarm as if it was breaking to the upside, only for it to make a U-turn. So sometimes that's the disadvantage of a ranging market, because you think you've bothered the resistance zone, but this part also definitely is still part of a resistance zone. That's why the sellers were still able to push the price down. All right. So that's why I say wait for a retest. So now look at this. Later on, what happened? The market broke to the downside, meaning sellers pushed the prices down and they were able to break this support zone. So anybody that was also trading direct, what's it called now, breakout, of course they would have made more money up to this extent. I remember I told you, how do you set your TP? Let's say this candle was the one that closed outside. Sorry, let me pick this arrow. Now, as at the time this last candle, because you wouldn't have been seeing other things, let's say this candle was the one that clearly broke below. You don't know where your profit will be. You don't know where the market will stop once it starts selling from here. Let's assume you're not seeing the other candles I showed you. Let's say you were here when the market closed above this. How do you know the zone to take your profit? I'll tell you, because you're expecting to keep going down. Look to the left. Look to the left. What is happening in the market now is what has happened before. Market is repetitive. So you see a zone, the next zone after this in the past. Can you see in the past? This is the same zone you marked. You just trace it down. Where is the next zone? Where move started from? I can see a zone here. Can you see? That way I can dictate where my TP will be, meaning where I want to take profit from. So what I simply do, I tap my screen, click on the symbol sign below this F, slanted F, the symbol shapes. I click on it, pick a plus sign, horizontal line, and I try to work with this zone I saw here around here. Can you see? Why is it a zone? A zone is definitely where moves start from, right? So there is a price attached to the line. I can see 97.73. I can bring it a little bit down. Good. Okay, 97.1. Good. So anybody that jumped in the same, immediately this candle close, would have made some money from here up to here. That's the first zone the market will stop. Now, the way market moves from zone to zone. All right, most times when it gets to one zone, it will do what we call a quick pullback before going down to the next one. So if I wanted to take profit again, I was like, okay, after this first zone, if this market still wants to go down more, which zone is it going next? I still look to the same left in the past. After this zone, can you see there was another zone here where buy move started from? Can you see the same zone here where buy move started from? So I can pick another horizontal line, right? Simply put it there. Can you see? Remember, we are looking to the left as if those sell moves haven't started. We're still working with just one candle that closed. Good. So this was the next zone. Can you see this is around, what's this price area? 94.1. Meaning more money to be made. Is it not? If you have started yourself from here, this candle that broke, which is this area is still around 98 point something, down to the 94.1 area. That's over 400 pips in profits, simply trading breakouts. But the disadvantage of trading breakout without retest is this. Like I told you, there can be what we call a fake out. Although before this market continued selling after I broke out, can you see there was a buy candle that immediately tried to do a quick retest? But this still is not a major retest, right? This is still not a major retest. Can you see there was a quick retest showing that buyers try to push the prices back up, but definitely they could not get to the support, the previous support that is now a resistance zone. Remember, resistance is where sellers sell from. So this area that was previously a support, the moment it breaks, becomes a resistance, and that's why prices sold here. But definitely I will still not join this breakout. I still want a proper retest. I want the market to still, buyers will still push back up into this zone area. So once market push back, we need to have some buy moves that will go back here to reconfirm this zone. If buyers push here and are unable to close back inside this range, but the buy candles close below the zone to mark, it will definitely give us a sell signal. Then it's the right time to properly take the test, the sell trade. That's what we call a proper retest. Now let me show you an example of what I'm talking about. You see it has happened in the past. That's how market moves. Now follow me to the past. Let me show you what market did in the past. Even though it was not a range, but anytime a market breaks around the zone, it comes back to retest. Now look at this zone. Can you see it's still part of the zone we marked? But look at it. There was a time it got here, buyers pushed up, but this sell candle clearly broke below this zone. I'm talking about this zone right now. This one, this double line. Can you see this was a sell candle that broke below the zone? What happened? Can you see market continue to sell right after I broke that zone? You can see more than 1, 2, 3 long sell candles. That's a whole lot. If you subtract the pips, around 99.1, it came low as 89.7. That's close to either 1,000 pips or even more than. So did you see that even though the market, so what happened? There is a time buyers still came back to this zone. Can you see this is a pullback move? See, this is an impulsive move. This move is called impulsive. It came down, but there has to be a retest. Can you see sellers or buyers now? Because it broke to the downside, sellers move. The buyers will have to do the retest. They try to push the prices back to the same zone. Can you see this buy candle? The first time it did this retest, could not close above this zone. What happened? Sell move came down again to the next zone. So that hit your TP. Buyers still try to push again back to this same zone that this candle broke. What happened? Can you see the buy candle that got to the zone precisely? Did it close back above that zone? No. So the moment this candle closes here and could not close back above that zone, what happened? If you had gone on a lower time frame like the H4, definitely you see a sell signal. And that was why this sell now happened. Can you see? So for every move like this, you wait for a retest. So this has happened, the retest, the market now sold eventually before something else happened and it started ranging. So the same thing, the same way the market did that and did that pullback, this breakout too, I'm still also expecting a pullback move, meaning I'm expecting a buy move back to this same zone. Can you see we've not seen a clear buy move that will come back here, right? So retest. Once the retest happen and is unable to close back for above, you definitely have your sell signal to sell. That way you can now generate your stop loss above this zone, and definitely your TP can now be based on the next zone. I hope this helps. So what I always advise is, even though you can buy the range back and forth, but because you don't know when the range is going to break out, or to avoid breakout, false breakout, I always say whenever you experience a breakout in the range, wait for a proper retest, meaning the market coming back to reconfirm that same zone before you take your entry. I hope this was explanatory.